Introduction to Individual Income Taxation. Welcome to our lecture on individual income taxation. Today, we will explore the fundamental aspects of how individual income is taxed in the U.S., including key terms, deductions, credits, and filing requirements. Understanding taxable income. Taxable income is the portion of an individual's income that is subject to federal income tax. It includes wages, salaries, bonuses, interest, dividends, rental income, and other forms of earnings. The Internal Revenue Code, IRC, defines and regulates taxable income under Section 61, which states that gross income means all income from whatever source derived, unless specifically excluded. Types of income. Earned income includes wages, salaries, tips, and other compensation for services rendered. This type of income is reported on Form W-2, which is provided by the employer. Unearned income includes interest, dividends, capital gains, and rental income. This income is reported on various forms such as 1099 INT for interest income, 1099 DIV for dividends, and 1099 MISC for miscellaneous income. Deductions and adjustments. Deductions reduce the amount of income subject to tax. There are two main types of deductions: standard deduction, a fixed dollar amount that reduces the taxable income. For the 2024 tax year, the standard deduction is $13,850 for single filers and $27,700 for married couples filing jointly, IRC Section 63. Itemized deductions. These include deductions for mortgage interest, property taxes, medical expenses, and charitable contributions. Taxpayers can itemize their deductions on Schedule A of Form 1040. The Tax Cuts and Jobs Act, TCJA, of 2017 temporarily increased the standard deduction and limited certain itemized deductions. Tax credits. Tax credits directly reduce the amount of tax owed and are more advantageous than deductions because they provide a dollar-for-dollar reduction in tax liability. Key credits include: child tax credit, provides a credit of up to $2,000 per qualifying child under age 17. The credit phases out for higher income taxpayers, IRC Section 24. Earned Income Tax Credit, EITC, a refundable credit for low to moderate income working individuals and families. The amount varies based on income and number of qualifying children, IRC Section 32. American Opportunity Credit, provides up to $2,500 per student for qualified education expenses. This credit is partially refundable, IRC Section 25A. Filing requirements and forms. Most individuals file their taxes using Form 1040. The form comes with various schedules, including 1. Schedule A, for itemizing deductions. 2. Schedule B, for reporting interest and dividend income. 3. Schedule C, for reporting income and expenses from self-employment. Filing is generally due on April 15th of each year, though extensions can be filed. Electronic filing is available and often encouraged for faster processing and refunds. Recent changes and updates. Recent tax law changes, including those from the TCJA, have impacted various aspects of individual taxation. For example, the TCJA temporarily increased the standard deduction and reduced the personal exemption. The IRS also updates tax brackets and rates annually, which affects the amount of tax owed. Conclusion. For your next assignment, review the IRS Publication 501, Dependents, Standard Deduction, and Filing Information, to better understand the various deductions and credits available. We'll discuss these concepts further in our next session. Sources: IRS Publication 501, Dependents, Standard Deduction, and Filing Information. IRS Publication 501, Internal Revenue Code Section 61, Gross Income Defined, IRC Section 61, Internal Revenue Code Section 63, Taxable Income Defined, IRC Section 63, Internal Revenue Code Section 24, Child Tax Credit, IRC Section 24, Internal Revenue Code Section 32, Earned Income Credit, IRC Section 32, Internal Revenue Code Section 25A, American Opportunity Credit, IRC Section 25A 40 Mini.